today's video, we're going to be having a look at what's going on with Lyft, Uber's competitor. We're also going to be looking at gold prices and some of the news from today's Australian announcements. Hello and welcome to another ACY Securities Market Update. My name is Alistair Schultz and I'm going to be your host through today's trading journey. Having a look at the first things for today, the S&P 500 is resting at its all-time high. It's largely been driven by its stimulus, but there are some levels of virus optimism playing into the boost as well. Now from there, we're still susceptible to much of the virus news, particularly on the hopes of a vaccine. Should something go wrong, then my anticipation would be that we do see a little bit of tumble in stock pricing. Now, something that is plainly obvious to me and is starting to be to some other analysts is there are some similarities that are occurring between what we saw in the dot-com run and what we're seeing right now. Back then, there was a lot of running up or a lot of momentum moving prices up on the S&P and a variety of other indexes, all the while there was little fundamental support behind the reasoning for it. So something to keep in mind when you're looking at trading the S&P 500 or perhaps on your stocks and shares in the future. Moving on to the competitor of Uber, Lyft. Lyft is a US and Canadian operator only. However, they have seen sales drop by 61%. Now, starkly, Uber has done the same sort of thing. They've had 61% in sales drop as well. But there is a little bit of a difference. Even though we're seeing the numbers drop on Lyft and Uber together, Uber's been able to actually support the rest of their business through their food delivery services, which have seen a little bit of a rise. So that shows a little bit of difference. Now, right now, Lyft's estimates were at $335 million for revenue earnings. However, they've just beaten it out by $339. So still a positive result in the scheme of things. But regardless of that, 61% down is a pretty bad result either way you look at it. Now moving on to, again, we're having a look at Airbnb. Now many of you have probably even used Airbnb services before. They are obviously a service that allows you to rent out properties for short-term stays. Now of course, if you're on the other side of that, you're probably looking on their website for somewhere to stay instead. Now they've had revenue drop quite significantly. Last year they posted nearly $1 billion in profit. They've now dropped to $335 million for this year so far. Now that's down 67%. And again, US bookings have only just marginally improved, but they're still planning to do an IPO in the fourth quarter of this year. At the beginning of this year, we were all looking towards Airbnb to have a successful IPO, especially with the results they've had over the last number of years and the development of all their services across the board. It was looking like a good metric. However, with the drops of plane flights, accommodation, and the need for that hospitality industry dropping right out of the bucket, they've not had quite as much success as they would have liked to have hoped, and they did delay that IPO. In my opinion, I think they should still be delaying it and waiting until they do actually see a return to running profits so that they have less worries about the taxation for one, but also the reporting side of things. But for now, we're going to have to keep an eye on whether they actually do IPO in the fourth quarter. Either way, it might be something good to have an eye on. Now, looking at gold, I thought I'd just cover this because we have seen some pretty weird gold moves in the last couple of days. We know it's been running up in value a lot over the last couple of months. Now, some of the forecasts that we're seeing already, Goldman was expecting $2,300 just a week and a half ago. Now, they're still expecting that. The Bank of America is about $3,000. We're also seeing Saxo being bullish on it as well. So a lot of guys out there, or a lot of analysts out there, are anticipating gold to continue climbing higher. Now, what I've noticed is the ascent of gold is really being driven by the ETF holdings. A lot of people aren't investing directly in gold. Instead, they're going with the exchange-traded fund options, which is really being seen in the amount of holdings that ETFs actually have right at this point. Now, in addition to that, we've had a slide in real yields, and they've only just slightly improved, which acclimatizes to what's gone on with the little drop that we've had just recently. Now, rates are also at all-time lows, and the US dollar remains weak. So my anticipation on that is that gold is likely going to be prevalent and it's going to maintain some of its strength and the valuation that it has at this point in time. We've also got corona and stimulus remaining to be used, so that is another aspect that we have to consider on the likelihood of gold moving bullish again. Whatever we see as a bearish move on currencies generally results in a bullish move for gold. Now, the one thing I will make note of is that gold is prone to quick devaluations. The other day, we saw a 10% drop pretty quickly. Now, in the 2011 era, we saw a 10% drop, and in 2016, we saw a 20% drop, all based around what was happening on real yields for US treasuries. So that is definitely something to keep in mind. If you're going to be looking at trading gold, make sure you keep an eye on what's happening in US treasuries because they are very, very important to the valuations that we see on both sides. Now, moving on for the last thing as well that I've got for you today, the news so far that I've seen for the Australian dollar. You can see on the chart that I've got here just on the screen behind me that we've had price in the Aussie go up a little bit, but then it's popped back down again, and it's been very little change. Now, the unemployment change was released at about this time on that spiky looking candle that we've got there, and it's 114,000 positive. So that is much better expected than what the 30,000 was for the estimate. Now, when it comes to the unemployment rate, we have seen a marginal drop of about 3.3%, down to 7.5%. So that is an early signal that is saying that perhaps the Australian economy is not doing too badly. However, it probably isn't accounting for what's happened in Victoria in the recent weeks and the lockdowns, which coincidentally are also starting to see a little bit of improvement on the situation with some of those coronavirus numbers starting to come down again. So hopefully we do see some more effectiveness of the lockdowns and we do get borders open again and we can get rid of this three-geared economy that we're currently rocking in for Australia. Now, looking at the news ahead of tonight, there's a few little things happening, not too much. Most of them are actually low impact or medium impact. There wasn't much for the high impact. The Australian news earlier today was the high impact event. Now we've got Euro-German final CPI happening, so if you're trading the euro dollar, keep an eye on that. We've also got unemployment claims for the US, natural gas storage for the US, and of course 30-year bond treasury results and auctions. So keep an eye on all of those, particularly if you're trading any of the US dollar pairs. You never know, when you get some medium impacts, they might end up being a high impact, or at least the accumulated impact of all of them together might be negative. So keep an eye on what's happening. Now, if there's anything from today's video or some of my other videos you'd like to get in contact with me about, please feel free to shoot me an email at talktoal@acy.com. And don't forget to like and subscribe to this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.